The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. If you miss an episode, I do have a YouTube channel, or you can go to themainstreetcode.com, where we have our past episodes on Spotify and Apple. If you're driving on the road and you want to listen to something different, listen to the Main Street Code. Or go to my website, themainstreetcode.com. And when we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors across the country, whether they're insurance advisors, attorneys, CPAs. They're calling us all the time to help with insurance planning. We are completely independent, represent over 30 different insurance companies, primarily in the area of life insurance, disability, long-term care, annuities, and life settlements. And we also are very good at helping you put a financial team together. You should really have experts in different areas helping you. I want to talk about what happened to me earlier this week. Is I got my mortgage statement, and they were going to raise my monthly fee by $800 a month. It's very significant. I go, well, where is that coming from? I mean, it was out of the blue. Well, it turns out that my cost of my property insurance has gone way up by thousands of dollars. Now, I was very perturbed that I didn't hear from my property company where I have my property insurance. And it turns out I did get a statement in July, and I put it in my file, and I left it there. And I didn't really look at it. And all of a sudden, it's up several $1,000s a month. I mean, several $1,000s a year. And, I went back to the insurance person. Now, I haven't looked at this thing in years. It's just, I pay my bill and I don't look at it. Much like life insurance and other things, people just don't look at it. They buy it and they forget it. And all of a sudden, I was jolted by my mortgage company saying, hey, you're going to have to pay us a lot more every month. And that really startled me. So then I started to look at my policy. And I went to 3 or 4 experts that I know in the property casualty field and said, hey, take a look at this policy and tell me what you think, because all of a sudden my price is up. Now, I may have the best company in the world. I did my due diligence when I bought my insurance. But, things change. With all the catastrophes, the big excuse from the property and casualty insurance, well, we could have another flood or Sandy on Long Island. Well, it's not just Long Island. Look what happened in California. Look what happened in Florida. Look what happened in Mississippi. All over the country, there's catastrophes. And we're paying for those catastrophes here on Long Island. And the risks are greater on Long Island, I understand. And these insurance companies have to get their money from somewhere. So they're charging us. So doing your due diligence with your insurance policy becomes very important. Now, a couple other things that jumped out at me this month that I'm looking at. The cost of Medicare that you have to pay, the Part B part, has gone up. So maybe it's gone up $20 for those who don't pay a lot in the Medicare part. For those who are still making a lot of income and have to pay a bigger part, which is called IRMA, that price has gone up. And these are little things that go up that we don't notice, and something to be aware of. Now, Social Security has an inflation element. Now, because they announced that the inflation rate was 2.8%, they only raised it 3% for next year. Well, that 3% doesn't cover the raise in the Medicare costs. So while they're saying, great, we're going to give you more money, but they're taking it back in another form, which tells me that whether it's real inflation on groceries or real inflation on something else, real inflation packs us, especially if we're on a fixed income or budget and we're trying to pay our bills every month, and all of a sudden Where did that money go? It's these hidden costs that creep up on you very quickly. Now, with life insurance, I get a lot of calls all the time. Oh my goodness, my life insurance premium went up. Usually that happens because of one of two reasons. One reason is you've been in term insurance for a long time, and all of a sudden your term is coming to an end, and sometimes the insurance company will keep you on, but they'll charge you a much higher price. Now, even though my term has ended, essentially, I bought 20-year term and I'm at year 20, you're going to notice, oh, your price is going from $100 a month to $300 a month. And while you may afford the $200 or $300 a month, it's only good for another year, because next year it's going to go up again because your 20 years was up. That's the problem with term insurance if you're not looking at it. Not only does that happen, but you might have had a permanent insurance policy where you were depending on the interest rate to last you, and all of a sudden you're now 80, 85, 90, and all of a sudden that interest rate didn't cover the cost of your insurance, and now your price goes way up. So you have an increasing premium rate. So these two areas you have to look at. And then there's the other situation that happens where you're doing well and everything else, but your cost of insurance becomes too high for you because you have other expenses or you have life-changing events, whether it's medical events or your kids are going to college or your kids are coming back from college or whatever. We all have things in our life that create great deals of expenses that we may have planned or unplanned for. And we're seeing a lot of people that are coming in with whole life policies that fund them correctly. But you know what? Now they need more insurance because they have kids or their lifestyle is changing. So we tweak those policies, just like my property and casualty policy for my home, which I'm having looked at. Maybe I have provisions inside that policy that I don't need. Maybe I'm paying for a low deductible and I could use a higher deductible. That these are all costs that the insurance company has calculated in. The same thing for your Medicare insurance. Maybe you have a low deductible on your drug card, but maybe a higher deductible because you don't use much drugs would be better, and it'll be a lower price. For those of you that don't know what a deductible is, deductible is what you pay out of your pocket before the insurance company pays. So there's so many mechanisms in all these different policies that you really need to review them, especially if you're on a fixed budget or you're going over expenses. You really want to fine tune. You don't want to be paying for something that you don't need. And at the same time, you want to have your money work efficiently for you. So one of the things we're finding with life insurance policies is if your term is coming to an end and the price is going up, it may be time for new term insurance, which will be much less expensive, possibly, or maybe get you closer to where you can afford to pay for the coverage you need. Maybe you need a different type of coverage, such as instead of whole life, maybe universal life, where I can maybe get double the coverage for the same amount I'm paying. So that's a situation. Or maybe you're just at the point where you're older and you can't afford to keep it. And in that case, sometimes we may look at selling the policy because it is an asset rather than getting rid of it. But let's sell it and let's get some liquidity back in our life, and let's get those expenses moving and grooving so that we can work with them. You're listening to the Main Street Code for Financial Success. You can reach me at 631-647-4694. This is Neil Himmelstein. My message for the morning is review all your policies, your life insurance, your property and casualty. Sit with an expert like us that can go through the nitty-gritty details of what you have, and let's make it more efficient for you so that you can have the happy life that you like. We'll be right back after a commercial break. Again, Neil Himmelstein, 631-647-4694 is the best way to reach me. We'll be right back. Thank you. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. And prior to the break, we were talking about controlling your cash flow and your expenses and really reviewing your policies, your life insurance policies, your property and casualty policies, your Medicare policy, and make sure that you're paying the right price, you're not overpaying for things, and that your money can work efficiently. Now, one of the things I constantly talk about is the market and how it relates to your income. That's the key. And the market's overheated. It's all driven by today. A lot of what we're doing is driven by AI. Now, it's funny. Everybody I talk to has a different opinion about AI, this artificial intelligence. And if you're not thinking about it in your planning for your life, that's scary, because we have to embrace what's happening right now. I mean, years ago, it was the computer. And the computer's going to take over the world. Now it's gotten deeper. Now it's gotten into AI. Like it or dislike it, it's creating a lot of issues. So you have to embrace it in some fashion and control it in some fashion. So where am I leading to? Well, if you're a federal employee, I feel for you guys. Not knowing whether you're getting a paycheck is scary. There are a lot of jobs out there being replaced by artificial intelligence, okay? A lot of jobs. Think about the future and think about the medical profession. And think about how you now have computers deciding how to treat you. Think about that. I saw a revolutionary thing that I read this weekend about AI discovering some sort of kidney disease, something that they can discover by these MRI pictures and everything else that an ordinary doctor couldn't see. They can take and view, but where does that profession lead you? In the insurance world, they're using artificial intelligence to not only diagnose you, but assess your risk. So they're using a computer, not a human being, to assess, hey, is this person going to live or die? Or are they going to need long-term care? They're using computers more and more to make these decisions. Doctors are relying more and more on computers to make decisions. Wouldn't it be great if I could go in and say, hey, I don't feel well? A computer's going to say, well, you got this, that. No. But I still don't feel well. Tell me what's wrong, doctor. What are we turning to? And how is that affecting our profession and our livelihood? Now, on the flip side, there's so many positives with artificial intelligence in able to compute numbers, to get your thoughts together and communicate them. But an over-reliance on artificial intelligence is making us dumber, and I'm concerned about that. So there's a lot of pros and cons, but you do have to embrace the reality of it and say, how can this work with me and what I do for a living to make my life easier and smoother, but at the same time not let it overtake me and overtake actually what I do for a living. So you really have to embrace it and at the same time be careful of it. And I think it's a hot topic, and you want to look at that thing. I know it's a little bit off base about where my areas of expertise are, but something that has certainly impacted my industry greatly and continues to impact it, and something you might want to think about. Now, I talked about managing your costs prior, getting off the AI topic again, and one of the things that I see is people still running for these CDs with which rates were very attractive recently. And let's say I know my Medicare costs are going up, my Social Security is not keeping up with the cost of my Medicare. So even though they're only giving me 3% on my Social Security, if my Medicare costs go up 10%, I'm not making more money, I'm losing money. And then I'm putting money in a bank account, which is maybe earning 2 or 3%, or I'm buying a CD, maybe it's earning 4%. But even when I put it in a CD earning 4%, that's not keeping up with the inflationary costs or the hidden costs of everything else going on. And not only that, but even at that 4 or even 5%, it's being taxed every year. So I'm gaining this interest rate, but they're taking it back on the flip side. So what am I gaining? So our products, we use a lot of annuities where you don't pay tax on it every year. It's a big deal. If I can get that same 4 or 5%, maybe 6% on something that's guaranteed, and I don't have to pay tax on it every year, I'm much better off than if I have to pay tax every year. Just on that. And it's going to help me keep up with inflation and the costs I need down the road to support my lifestyle. So that's why we use fixed annuities a lot and quite a bit. So to tie this all in between AI and efficiency of money, you have to realize that not only is AI driving medical decisions, it's also driving the stock market. Tremendously so. When we have computers analyzing all these analytics and making buys and sells without there being a human present, are you ready to take on that risk of that AI just messing around with your investments? That's what's going on. We had a recent downturn in the market, and they're blaming AI, but AI is controlling it. AI and billionaires are controlling the market. And I've said week after week after week, it's time to take some of that risk off the market. You see what the insurance carriers are doing by taking risk off the market. They're charging you more and more money. That's how they take risk off the market. The investment companies, they're not stupid, okay? AI is driving this market to profit levels that are absolutely stupid. The earnings to cost ratio is absolutely out of touch. It's such a risk game now, controlled by computers and billionaires, that you really need to look at taking some of that risk off the table. You can't charge more money for your money. What you can do is take a piece of it off and protect it and buy annuity products, which the interest rate's guaranteed, and I don't have the taxing effect that a CD or the bank has. So I'm taking advantage of all these different situations, always being tax efficient, because where is my money going? It's going in my fixed expensive. The inflation is happening. You can argue about groceries all day. You can say groceries are up, groceries are down. I believe they're up, the price is up. But that's not what's driving my daily costs. My insurance, my Medicare, my Social Security, these are driving the daily costs. My mortgage rates. All this is driving my daily costs. And groceries are all part of it, and oil is part of it. But let's look at the big picture. We have to be efficient to just keep up. We have to have efficiency where our portfolio, our personal wealth grows just to stay even. It has to grow to stay even, if that makes any sense. If we're just sitting with our money on the bank or putting it under the mattress and it just sits there, it actually loses value every single day. So you have to be engaged and you have to be efficient. And part of it is controlling the tax savings as well as controlling your costs. How do you make more money? You either charge more money, you see more clients, or you control your costs. So that's what we do. So when we do our review, you need to review all your policies and maybe get new ones to protect your money and control your costs. You've been listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. I do appreciate your comments. I do appreciate you coming in. It is getting very hectic this time of year. There's a lot of moving parts, not only with your money, vacations coming up, holidays coming up, the expense of the holidays, a lot of stress, a lot of moving parts, airplanes, are they going to land, are they not going to land? I get it. I understand. Give us a call. 631-647-4694. Have a great weekend, everybody. Thank you.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.